This program is brought to you in association with First National Bank of Botswana.
Fnbb, how can we help you?
The winds of change are definitely blowing, carrying away with them the economic hardships that emanated from the ruthless COVID-19 pandemic since 2020. As we all know by now, the outcomes were not only devastating to the global population's health, but also on the health of most businesses, organizations, and varying sectors of economy and activities. While others did not make it, many more have started making turns for a complete 180 towards their formative, prosperous eras. One of those is the largest commercial bank in Botswana, the First National Bank of Botswana, whom at the half-year financial results announcement reported an impressive 38% profit after tax and a 24.7% return on equity. While of course these results are evidence of hard work from a dedicated and united workforce, the direction in which to head was informed by a well-thought-out business strategy. But then again, strategies can be quite broad, which begs the question, which key component of this strategy may have significantly contributed to these stunning results? Here is Stephen Bogatsu, the bank's Chief Executive Officer.
Indeed, this has been a very challenging year, but despite the challenges that we encountered during the year, we have seen our results returning 38% year-on-year growth and profit after tax. And if I just took you through the various components, I believe the first thing that benefited us is when you look at the income statement and you look at the net interest income, is the fact that one of the strategies that we had employed at the time was to improve on our the transaction franchise. By so doing, we were able to increase our liabilities, our free liabilities, which had an impact on our overall cost of funding. Therefore, that improved our net interest income. The second thing that we did was around collections. We intensified our collection strategies, not only to collect, but to also work with our customers and ensure that those customers who were struggling had an opportunity to restructure their facilities. That has seen a large chunk of our impairments being reversed. The next thing that we did was around transactions, where we availed various electronic platforms to enable our customers to continue transacting 24/7 in the comfort of their homes or their offices without the need for them to come to the office. That has obviously assisted us with the net interest revenue, which grew by about 11%. We also, as we previously indicated, continued with the rollout of some of our products, including the Cash Plus agents that have been rolled out through the country. Again, that also contributed to the increase in the number of transactions. And the last thing around NIR that we did was to enable our POS devices to have other functionalities. Customers don't have to queue at an Fnb ATM in order to encash their e-wallet, for instance. They can go to any store that has a Cash Plus agent or any store that has a POS device and encash their e-wallet. The last thing that we did was to focus on our costs. That enabled the costs to grow in line with inflation, which was great because despite the fact that there were some investments that we put through, the revamping of some of our branches like the Airport Junction branch, the Lobatse and the Kasane branches, we still managed to stay within our cost-to-income ratio of about 47-48%.
At the outset of the pandemic, Steve, the bank fast-tracked a strategy called Productive Me, which was geared, amongst other things, to help staff transition to working remotely successfully, right? The bank was to convert some of its building space into other functional spaces, and that did not include staff offices. But conversely, we're seeing a change in pace. So we're seeing now staff going back to the office to work more on a face-to-face basis. Maybe at this point, you could talk us through what caused that change in thought?
You're absolutely right, Bonasa. What started off as a value proposition to our staff members around productive me, which basically means I am productive wherever I am sitting. I don't have to be in the office in order to be productive, was unfortunately accelerated by COVID. And therefore we had majority of our staff members in order to ensure that we social distance working from home. Now the call for staff members to come back to the office is on the realization that there are other benefits that you get from staff members being in the office. So we are not asking staff members to come back to the office 5 times a week. We are basically saying in order to inculcate the F&B culture, we need staff members to come to the office at least twice or thrice a week, or however often depending on what the team envisages. So for instance, you had a number of staff members that were employed by F&B during the pandemic days, during the lockdowns, who have never even met some of their colleagues, who do not even understand the F&B culture. Now it's extremely difficult to inculcate an F&B culture with staff members working remotely. So that's one of the reasons why we are saying to staff members, for some of your engagements, come and have them in the office. It has become very apparent that some of the teams are actually tech fatigued. This thing of having Teams meetings or remote meetings has taken a toll on some staff members. And we are saying we have revamped some of the spaces, we call them vibrant places, to give them the brightness that enable collaboration and innovation. So come back to those vibrant spaces that are a lot more vibrant than some of the places that we are currently working at. And that really is the motivation.
An expected significant rise in inflation is expected to see dire consequences on the SME sector, especially financially. So being a bank that has adopted a customer-centric model to doing business, how prepared are you to helping these customers should they encounter difficulties that render them unable to service their obligations to Fnbb Botswana?
A number of our customers were impacted by the slowdown in business. Some of them have obviously been impacted by the rise in costs. We know that energy costs are rising. And as a matter of fact, with the current developments around Ukraine and Russia, we are likely to see an even more increase in the prices of energy, electricity, water, as a fuel, impact and transport costs. Botswana Housing Corporation has indicated that they are increasing their prices as well. So there are so many factors that are actually happening that will impact the ability for some of our businesses that we support to conduct business. So in realization and in appreciation of that, we will continue to engage our customers because in our credit department, there are interventions that have been put in place in the past in enabling customers to restructure their facilities in order to cushion the blow on their cash flows as a result of these external forces that you have just mentioned. We also know that there are a number of initiatives that have been deployed by government, such as the Beki Guarantee Scheme, that have been put in place to assist cash companies with cash flow facilities to cushion the blow that is brought about by the very factors that we alluded to. So we are open for business to have those conversations with our customers to assist them with some of the challenges that they are having to navigate as a result of the developments we are currently seeing.
Steve, government is in the process of reconfiguring some of its entities because some of them really replicate mandates. So many have argued that this would see mass losses of jobs and therefore losses in income. In light of this, what is the bank's financial position? Is the cushion soft enough for a smooth landing for both the bank and the specific customers?
A number of initiatives had previously been put in place. Right at the beginning, when we were originating some of the facilities, there are a number of interventions that we had put in place right at the onset of the loan agreements. Such interventions included providing or availing insurance products that will cushion our customers in the event such developments that you are referring to triggered in. So there was an opportunity that was availed, and we continue to have those opportunities in place, those interventions in place that cushion the blow for many of our customers. In addition to the insurance products that I am referring to, there are other measures such as the ability for customers to restructure their facilities that we have put in place. So there are a number of options that we actually have, which we discuss with individual customers to enable them to take advantage of what is availed in order to cushion the blow for them.
Welcome back to First Issues as we continue with the First National Bank of Botswana half-year financial results announcement ended 31 December 2021. To talk us through these results is First National Bank of Botswana's Chief Financial Officer, Luke Woodford.
I think the context of the December 2021 results are best understood both when comparing to 2020 as well as 2019. The 2019 results, where we had continued over the past trend of the past few years, we had seen good improvements in the results. And then obviously in December 2020, we were mid-pandemic. We were very conservative in our provisioning. We had seen some stress in our SME portfolio, had done a lot of client restructures to accommodate clients' financial strain that they were going through, and we had seen a decrease in our non-interest revenue over that period. Now, as we've come through the pandemic and we're starting to see the recovery, we've seen our results recover in line with the previous trends. We've seen our non-interest revenue come back with a strong recovery in the foreign exchange space. We've also seen that our costs have grown as we've continued to invest, and seen that we've brought back business as usual. So really seen a very strong growth in our non-interest revenue, forex related, and then growth in costs, and also then just a normalization of our impairments, where we've seen our impairment charge or credit loss ratio, we would call it, coming down to a much lower level than the comparative period. So really, if I compare 2020 to 2021, 21 been a stellar performance. But when we bring in the 2019 context, we're really just back on track to where we would want to be at this point in time.
Because of the ongoing pandemic, most financial planning within many institutions and organizations is usually touch and go as regards managing day-to-day business. So how is the bank managing costs, especially operational, that proliferate from rolling with the blows of COVID-19? Especially seeing that at the last announcement, the same saw a slight increase, mostly brought on by setting up staff to work remotely.
This is a conundrum facing a lot of businesses. A lot of businesses don't necessarily have financial resources to be able to maintain their strategies and maintain their capital expenditure and investments over these type of headwinds. We're very fortunate as an organization to have a strong capital base, to have had a profitable business for a number of years. And this has allowed us, through the headwind of COVID, that we don't need to interrupt our investment cycle. So as a big organization, we've managed to maintain our strategy. We've continued to execute on it. We've continued to invest. We've rolled out more ATMs, more cash plus agents. We've refurbished branches, and we've continued to invest heavily in our IT infrastructure as part of our Future Bank initiative. Now, when we look at the converse of that, to say a big organization typically would struggle with agility. So when headwinds come, how quickly can we reduce our cost base to match the depleted revenue and just ensure that we protect shareholders' interests? We saw in the December 2020 results that we were able to reduce our cost base at that time. So as the activity in the market slowed down, we were able to cut back on some of the costs that the bank incurs and show that we were able to manage the costs even through the difficult times, while not necessarily interrupting this investment cycle I'm talking to.
So looking ahead, how is the bank going to continue being profitable, paying special attention to what you consider to be some of the most important metrics to focus on for that to happen?
Over the lifespan of this bank, we have ensured to put the customer at the center. And most of the metrics that I look to is to see how pleased that customer is with the experience that they're getting and the services really that are available to them. So a lot of the metrics we look at talk to the customer surveys that we've run, And then there's observable inputs that we can look at as well. We see at month end that there's still long queues at ATMs and branches. So some of the investment, kind of getting this understanding of what's the customer pain point helps us to know where to invest. So part of the investment we've made, for example, I think we've made this investment about 2 years ago, was enabling the Cash Plus agency network, broadening the spectrum of available places that customers can access banking. In addition to that, we've enabled our point of sale devices. Now we've got 11,000 plus devices down in the market, and those point of sale devices are now able to do more than they were in the past. You can withdraw cash at a number of those devices. You can also cash your e-wallet or spend your e-wallet at them. So when there are long queues at the ATMs and the branches, we know that we've got an alternative for customers to go to. And then obviously the bank is working on the change management to allow those customers to know of the alternatives that give a better banking experience. So those are some of the key metrics we would look at from a customer perspective. And then obviously our staff are very important to us as well. We've done a lot of investment in our IT platform, just improving the staff experience. So really, if I use it as an example, I can go on my phone, on my banking app, it's got an area for staff, and I can book my leave, I can approve other people's leave, we can do claims. There's all kinds of interactions that staff can do via easier and simpler platforms to allow for them to access their remote working stations. We also have put in a lot of investment into security. A part of that as well is also using this two-factor authentication on phones, as well as the app authentication, just to ensure that our networks and our infrastructure remains safe.